Hey, speculators. Welcome back to the Futures Fanatics channel. For our power hour, we're going to do a live 1 hour, probably mostly rant. I don't know. I think I put the title in there. What the F is happening? I've only been doing this for 30 years, and I've had some of my roughest, wackiest, weirdest trading sessions all packed into a month or so. 2 or 3 weeks ago, I think about 3 weeks ago, Sunday, a 5 standard deviation open. Just craziness. Little look at what I got going on now. Just a couple live trades, sort of in opposite directions. I'm short the S&P over here in a Tasty account. This is up pretty nicely. I did start buying the Dow on the pullback here, so this is down a little bit. I don't know why Tasty doesn't show the P&L for the Dow. I've told them like 10 times their integration is pretty crappy. And then over here, I'm actually long the Dow as well. So my Kerpos pretty limited. The moves in gold over the last 48 hours. The blatant market manipulation yesterday. It's been maybe the third or fourth time. I was mentioning in my room this morning that I was watching a bunch of options activity even in the futures markets yesterday, and we're up pretty big. It's about 20 minutes before the close, and they're just going after all the calls they could get. You don't see that much call action on the S&P. Then I went over and looked. They were taking the SPX and all these things. And then during the 1 hour shutdown is when Trump came out and said, hey, I was just kidding about Powell. Sorry. Someone got to me, or maybe it was the Wall Street Journal article. Who knows? So it's hard to get into this without being too political because everyone looks at it as political, but this is the dumbest stuff I've ever seen. Regardless of the outcome, literally regardless of the outcome, it's the stupidest path to get someplace, no matter, even if the outcome is very positive. I would take an outcome that was clearly communicated, even if it didn't come to pass. I think that would also remove some of this stupidity. But it has real effects. Look, don't cry for me. I've been doing this a long time. I'm financially pretty stable. But the tracking accounts that I was using for this, one of them got completely destroyed 3 weeks ago. I'm trying to help other people hedge and do some things in their retirement accounts. And look, this is just 10, 15%, 20% off of very juiced high levels. I get all that. It's just the path that we're on. I don't get to fundamental or bottoms up or top down. I'm just a day trading shop for the most part. But I don't think in the history of the United States, even maybe pre-actual equity markets, we've ever seen, well, I don't know what the currencies were at the time, so I'm going to probably put my foot in my mouth as a historian. Let's just say in modern times, where equities are this volatile. Yes, we're up today, but we'll see. They sell the dollar. Until yesterday, buying gold. There was a lot of gold manipulation today, clearly, because they were selling the crap out of calls and buying a shit ton of puts yesterday as well. So the dollar being sold, treasuries being sold, equities being sold. No bueno. All right, enough about that. Let's talk a little bit about what I'll be doing. I'll buy the -2s if we get down here. I think this is the lead account. Yep, this is the lead account. So I'll buy the -2s. That's this level right down here. The range expansion has been massive today. We're outside day up, and we have a gap that we haven't filled. Yes, just your average gap on a Tuesday to a Wednesday session that we had yesterday. 118 points or whatever it was. I think we're putting in 62 or 63 point 1 hour candles on the S&P. In the upper right-hand corner, I do have Apex in their 90% off sale. If you don't like Apex, don't come at me in the comments. I don't really care. But I did want to provide a update for those that were asking. Again, I think this was a good thing. I didn't get paid because I'm an influencer. I didn't get paid because I have any pull. But what did happen was I was able to alert, I do know the guys over there, and I was able to alert them that I felt that some of the rules when it came to true risk-adjusted trading and micros, you could just eliminate and not even do a test for it. So it looks like that's going to be in place very soon. I cannot guarantee any of these stuff, so don't come back at me. But what I can tell you is if you trade micros, and let's just pick a number. This is not from them. This is from me. If you trade micros and you trade less than 10 micros, so smaller than 1 mini in any size account over there, and you abide to a soft for yourself daily risk budget of not to exceed 15 to 20% of your account balance, in the room we use 10%. So if your account's $2,500, well, let's say your account has grown to $5,000. Over here, I have 2 PAs that I use to track. I might fund a few more accounts for the first time in a while. Typically, I just pass these things and cancel them. But I did learn a bit from having these PAs again. But everything that you see, the non-PA evaluations, these take profits are all pro accounts. And this PA, these two are PAs that this 1250 came out of. I do not trade more than 4 micros in any of these accounts. So I'm not even close to 10. So to finish my point, if you trade that way, which is the appropriate way to trade at all these firms, if you trade that way at Apex, you will very likely have close to a rubber stamp approval. And that means approved and paid in a very short period of time. Okay? That's all I can tell you about that. Now, are there people that are still following all of the rules and the true rules and getting payout denials? Yes. I can't get behind that. I don't know exactly why. It's not as widespread as advertised, not even close. But if you've had a negative experience over there and you're capable of trading the way I'm describing it, it's one of many firms that you can choose from. And right now, at the 90% off, even with the activation fee, it puts it right around. Well, it puts it at the cheapest option for bigger accounts. And I typically don't recommend buying bigger accounts. I'm buying bigger accounts now because for our group, I've already shown, hey, I can do these 50,000s in my sleep. Let's take a little while longer. It takes me about a month to 2 months to pass the 150s. It takes me about 3 months to pass the 250s. Although with volatility and stupidity like we have going on right now, I can put up $2,000 days. And I want to point out again, it's $2,000 days with 2 to 4 micros in 3 markets. All I traded today was the MYM, the MNQ, and the MES. All right, so anyway, we've closed the loop on that. There was a lot of questions. I don't know. Ask yourself if you're capable of doing it. And look, another thing that's maybe a bit Apex specific, or a few of the other firms that still allow for lots of cheap, low-cost accounts. The fraction of traders that are able to come in and pass these in a few days by throwing on size that can then switch back and do it properly once they have a PA it's almost zero. I probably couldn't even do that. I could pass a few. I'd probably blow some up too, because it's just way too much size and risk for a $7,500 account or a $5,000 account. And then once you see that sort of juicy, easy money, who would want to switch back to doing it the right way? Why not just activate it and take shots? So the fact that I was able to catch a payout denial that happened to me personally because of a silly hedging thing, being long MES and short MNQ simultaneously at the few times, was a great thing to be denied for, because that is actually something that should be fixed and has been addressed and will be fixed. Because what we can do with these firms is start to eventually, I don't know when, but eventually I'm hoping that I can bring a cohort of traders to these firms. And if this is not you, that's fine. If you want to obviously do whatever you want to do. I have a video coming out soon that ranks all these prop programs. I'm probably going to get a ton of shit about it. Everyone has very strong opinions, especially if you're in this echo chamber of these prop programs. And by the way, I've gotten a bunch of snarky comments, as you often do. I like the nice comments. I like all the comments. It's the snarky ones that don't really add any value that do they get under my skin a little bit. So let me point one out as I rant right now. This is the market right now. If it wakes up, I will do a trade. I don't do this and then come in here and sit on my hands. If there's trades, I'll take them. There's no trades right now. So instead, I'm ranting. I'm working an order bottom right here to buy the S&P at 53.76 half. That's called our -2. Okay, right here. And I am currently short the S&P, looking for a target of around 53.78. And I'm long the Dow Jones, looking for a move back up to VWAP or to this level right here. So back to what I was talking about, I'm hopeful that at some point what can happen is we break up traders into a cohort of those that kind of want to do this correctly, and these firms don't have to worry about us at all, and we can literally supplement our income. And then the firms can make a choice on how they want to price things and how much they want to protect themselves or deal with the fallback and blowback that comes from having to deny payouts or change rules or limit the amount of accounts, or this insanity. It came up this was just the craziest day, because I think it might have happened yesterday, all the nonsense that's happening in the market. And then you have the guys at Top Step again, just spouting off stupidity about self-regulating organizations. You know, my advice to those guys over there would be just manage your own business. Don't worry about thinking that you're some leader in the industry. Just manage your own business, right? Own up to the fact that you remove daily stop losses so that you can get more resets and more people blow up their account. So if you know what I'm talking about, you know what I'm talking about. But that stuff just drives me crazy too. Because the only thing that requires any regulation now is figuring out whether these firms are ever just going to normalize their businesses, probably cut their revenues by 50% or not more. At a firm like Apex, it might be 70, 80%. And just truly run an organization that is searching for risk-adjusted traders that can manage a $2,500 or $5,000 or $10,000 account properly. Nothing wrong with that. And then we can decide how much leverage per account is correct. Is it 3 accounts? Is it 5? Is it 2? I don't know. It's not 10. It's not 20. But if you're new to my channel or what I'm doing here, what you're seeing on the screen right down here is possible with this methodology without really over leveraging this. Well, Rod, you're up $2,200 in a $7,500 account. You must have been just trading this crazy day that was today. This morning was the stupidest thing I have ever seen. I've traded through the pandemic. I traded through stuff before some of you guys were born. Not the 80. I was in high school in '87, but yeah, look at this face. A high school in '87. I was a senior in high school in 1987. So I have been trading since I was 21 years old, and I started at Merrill Lynch when I was 22 years old. No, 21 years old, 1991. Started trading OEX options in 1991. So I'm celebrating maybe 34 years. There was a massive Asian currency crisis in 1997. People probably won't remember or know about that. And that was actually the year in September of 1997 that the S&P came out, because I was the mini. I was trading the bigger contract before that on the Pacific Stock Exchange, which was insanity because that was the beginning of electronic trading, really, and SOS trading had just come out as well, the small order execution system, and everyone thought I was a complete moron for trying to compete with the pits and all the stuff that's happening in Chicago. I didn't set foot on the Merc or any place in Chicago until 1998. I was 28 years old. So I was trading electronically when those guys were still all, just front running order flow. Add all that up, pandemic, '08, whatever. Today, literally the stupidest thing I've ever seen. And partially it's because the stocks are so much bigger, and we have the Magnificent Seven, and they're trillion-dollar companies. It rips the NASDAQ all over, and the machines are faster, and the algos are faster. I get that. But the inputs that are creating it are just nutty. So against all of that backdrop, you still have an opportunity to trade micros at high probability areas, make your risk budget the only thing that matters, not how you manage any individual trade, not what strategy you trade, not which prop firm you work with. This is the greatest opportunity I've ever seen, even though today I was very disappointed in what is happening in our markets. Super disappointed. Because I don't hear a lot of people talking about what needs to be said, which is that this is the most dangerous crap I've ever seen. It is not healthy, even though the machines are working and there seems to be liquidity around the edges. This is not, in no way, shape, or form, is a good spot to be in. And until yesterday, you saw that in gold. And currently, you're still seeing it a little bit in Bitcoin. All right, we're getting close to a -2 touch here in the Dow Jones. Chart on the bottom left here is the Dow Jones. And then down here we have the -2s are 53.75s. And in this live trade, I'm actually looking for 53.78 quarters. So we could just sort of sit on this. And here on TradingView, this is the same strategy. It's just I don't have the Renko bars. So you can set all this up for free. And if you're interested in finding out more about what not the rant I went on about the backdrop of what's happening, but the opportunity that exists in prop programs, you can download Prop Done Right It also comes with a 10 video course where I send you a video each day. That's going to be in the description below. Despite people that leave idiotic comments about content creators in the education space without doing their homework, I don't sell Discord. I don't sell courses. I don't sell any of that. All it is a trade room. Come in, check it out if you like it. But in the Prop Done Right ebook, you'll learn everything you need to learn to do these things properly and get started. And if you use TradingView, you could set this, everything you see up here, for free. I think you do have to have a paid TradingView account. Maybe that's $15, $20 a month. And in the bottom right-hand corner here, I don't know if you can see, it says net liquidity of 72.47 and unrealized profits of 472. There's a reason that I keep this account around $7,500. Anyone want to guess why the reason is? There's a reason this account is around $7,500 too. This one's about 8,000, even though I'm down $250 on a ZT right now, because they are selling. In other words, rates are going higher on the short end of the curve, while gold is going down today, and the markets are up 3%. Super healthy, super weird. All right, we'll see if we get a fill here. Are they going to fade the whole thing? And we also have the NASDAQ in what we would call our bid zone. This is 18,669 is where the -2s would be. If you want to take advantage of the Apex sale, it goes till Thursday, although they extend it all the time. The code, if it's hard to read on there, is TDG Fanatic. All right. Is there anything in here that I should respond to? Should you bother with NQ? If you mean the actual NQ, you should not. You can't. This is a good question. The question is, should we bother with NQ honestly? With small accounts, a drawdown, you could lose $80 in 5 minutes. $80 in 5 minutes. I don't know if you're referring to the MNQ, but you should not trade any mini in any prop account. Let me say this again. You should not trade any mini in any prop account. That's it. Done. Now, in Prop Done Right, I mentioned starting with the MYM, the Dow Jones, and that's it. And see if you can do just the MYM, just one, maybe two accounts. You can get one from Apex. You can get one from Bullinox. You can get one from Take Profit Trader. You can get one from Top Step. You can get one from Tradeify. You can get one from My Funded Futures. I don't care. Do wherever you want. But see if you have the discipline to trade between 1 and 3 MYM, pass a program, get to the buffer, and take a payout. $500. I don't care what it is. Your return on investment, even if you go with one of these firms where it's a little bit more with no activation, or you go with a cheap firm where the activation's higher, let's say your cost basis on the account's $150. There is nowhere in the world that you can triple your money safely, and I'm going to use the word safely because once you develop the skill, this is safe, where you invest $150, invest 30 to 60 days, and I'm talking to someone who knows nothing. And if you are failing or saying Apex sucks because it denied your payouts when you had built up an $80,000 profit and 20 accounts, and then they said erratic trading behavior, or you're on your 200th PA or whatever, I'm not talking to you. You're a lost cause. So go do whatever you want to do. But who I'm talking to is someone who, in many parts of the world, $150 is a lot of money. But the potential to make 500 or quadruple your money invested by just being patient and investing some time. And maybe I couldn't think of any better backdrop of a day where, in some of my personal accounts, I've just been hemorrhaging money. I take full responsibility for it. One of the things I say is, don't eat like a bird and shit like an elephant. The other night, I sold 3 or 4 calls at 3,500 in gold, full GC contracts. And then I sold 2 of the underlying, and on the whole trade, by the next morning, I made like $8,000 or $9,000. And today, I lost 10x that on the long side. On a day where, I don't know, is this the biggest drop in gold in 5 years? I don't even know. I don't care what the stats are. But, and yeah, should there have been stops there? Should you manage that better? I mean, essentially, I had sold some puts, right? You sell puts, you can get hammered sometimes in terms of they were already so deep in the money that all I could do was to start shorting it, and I shorted to get some of it back, but just didn't work out. And I'm a big boy. I'm okay with market volatility. I'm okay with those things, but the inner workings of what's happening in the market right now, this is not the time to be saying things like, these prop firms suck and they just do this and they just do that. You know what? If you keep your costs low, it's the best time in the world. I wish all I had was these prop things down below. I wish that was all I was involved with today. All right. See, are we going to get a bounce out of the Dow, or are they going to? You think it could go red? We have. We got our 2:30 central candle about to open up. Thank you, Dominique. Dominic. Don't say Dominique, right? Dominic. Do you find the last hour more suitable, profitable for strategy showcasing? So when it comes to time, the only suitable time to actively day trade stock indices in the futures markets is the New York Open for an hour and a half. So let me say this again, and an hour before. So let's do it in Central Standard Time, 7:30 to 10 a.m. Central Standard Time. If you're not able to trade any strategy during that time, you probably should not look to actively day trade. I know that might be a little controversial. I mentioned this morning there's the guys over at Topstep, they think slow markets and some other stuff where they're trading 20. And I understand you can trade the Nikkei, you can trade the DAX, and there is a micro DAX and there's a micro Nikkei. And there are periods of volatility, in other words, range, enough range. You cannot be a day trader if you don't have a range to work with, right? Doesn't matter what your strategy is. If you're in this little condensed little area where something's about to snap, you can't manage risk in that environment. You need to have range. So don't worry about this strategy or whether it's the right time to trade, this strategy during these power hours. The only time to hone your skills is on the New York Open and the hour before. Okay, so there you go. Oh, great question on adding a third deviation band. I don't. There's 2 things that I generally don't do that some of the people in our room do. So some people are. The reason I'm not going to do it, and I would agree with Trading Life, who's saying this is probably not going away anytime soon, is I'm not really doing active full-on backtesting with my group anymore. We from about 2009 to 2013, 14, I had an amazing group. It was some of the best time. I don't mean trading group. I mean other colleagues of mine where we were just doing all kinds of stuff, mostly in easy language on TradeStation, really, really lots of back testing. And I think from the retail side, we were cutting edge because we didn't do these bullshit back tests and then try to sell someone some bullshit back test. We would only back test to try to find candidates to walk forward test, to really walk forward test things that might work and then understand how often they would need to be recalibrated. So we came to stay in your lane and found, and again, we were using VWAP way before people were using VWAP, and we were using these bars, you see, way before people were using these bars. So these bars, you know, shout out to Rod, who created them, not this Rod, actually who coded them, and to Roger Felton, who kind of developed them. So I'll give you a little history. There's, you know, and then the other history that people should know, especially if you're stock traders, is every fucking indicator you use is because of the futures markets. The stock trading world hasn't done shit for active technical trading ever. Everything comes from futures. And I mean that. Everything. It all comes from futures. Bollinger, everything, all the bands, everything you use. And look, if you're not a technical trader, you think this is all nonsense, do whatever you want to do. Just make sure you abide by a daily risk budget. But back to making a modification and adding a third standard deviation band. I'm not going to do it because I haven't really done the testing for the validity of it. I do know that 84, a little 80, over 84% of the S&P price action will take place between two standard deviations all the time. It doesn't matter what the day is. And what's interesting today is all this range. Should we do a survey? Are we going to get outside this standard 2 deviation band? No, I mean, maybe we do. I mean, I have no idea. Are we going to get outside this band here? We could definitely get outside this band here. It's another 100 points. But I hope we do get outside the band because then we can see how long we stay outside those bands. Right? How long do we stay outside these bands? So I'm not going to be adding a third standard deviation band. And the other thing I don't do is I don't change these Brickwick settings. I have a couple times, but if you want to slow down the speed and the velocity of these tick charts, I get it. Oh, hold on a second. I guess, all right. I guess she has the keys. I have a couple cars. I wonder which one my girlfriend is going to take to her nail appointment. Let me look. Something tells me she's going to take the Porsche. Okay. So no standard, no add of a third deviation, and I'm not going to change the bands to. Change the Brickwicks to reflect that. I'm probably going to take profit right here, though, on this right here at symmetrical double bottom, so it'll guarantee that it goes lower. There we go. All right. So we're out of that. Sold one up here at 54.78, covered it at 54.17. And then I had another one that I've been holding forever, and we finally got down here. I've been trading on both sides. Okay. What's your experience with market profile? I have my version of market profile. I just use volume profile. So I don't use the full TPOs. So I have this whole, there's two strategies I teach. One's called the range trader. By the way, the -2s at 53.73, you can see is right at the gap, right? So that's a key level. It'd be very interesting to see if they hold this gap. We were shooting for the gap the whole day. It just took some time to get there. So market profile is generally referred to as again another thing that came from futures, TPO, time price opportunity. The things where you would see with the A, Bs and the X's and the O's, mostly. I just prefer volume at price over anything that has to do with time. I don't really care about time. The only time component that I use from a market profile stuff is I just keep a 30-minute because the original TPO stuff was all done with 30 minutes. So I just use a 30-minute. And even today, if you're watching, when in these type of environments, there are a lot of algos that key to every 30-minute open. Are you watching? Like, so I guess we didn't get that much at the 12:30 or 2:30 Central, but today at 9, 9:30, 10, 10:30, 11, these are all West Coast times. We got all this erratic wackiness that we had to deal with. So anyway, not market profile, but certainly volume profile. Do I actually trade pre-market? I don't. Our room is not open till 6:15, and usually, and that's 8:15 Central. I'm just going to stop with all the time zones. I'm in Las Vegas, so I'm always going to give you Pacific time. So I'm up at about 4:15 Pacific time, and I'm usually looking at the markets for about 15, 20 minutes. Occasionally, I will put a trade on, usually in the Treasury market. Today it was gold. But for the purposes of my education and all that stuff, we just use the cash open, and I'm not doing a lot of trades pre-market. Do I think the gap will be filled overnight? If I had any predictive power, I wouldn't be so pissed off today. I really don't know. I can tell you that gap was what it was, right? I went to go pick up my girlfriend yesterday, and before I swang by, I had a quick meeting at the Aria. And I remember just walking, as I was walking in, all these alerts went up on my phone because I have a bunch of things set up for price levels and gaps and whatever. And I thought I was hearing something. I was like, well, those can't be hit. That would be like 120-point gap. And then I like, oh, now what? And then you look. Oh, I was just kidding. I'm not going to fire pal. Sorry. I let all the nonsense happen on Monday because why not? Probably good opportunity to let these same people that are going to get away with murder just load up again on calls, which they did. So, do I think the gap will fill? I don't know. But it's an artificial gap. It's not a gap that's based on, but are all gaps created equal? I don't know. Speaking of gaps, one thing that you might want to take a look at is Edgeful. Is everyone aware of Edgeful? Okay, I need to start doing more with Edgeful. Okay? And if you're interested in this, I do have a discount or something. I don't know. Whatever. Come into my trade room, find a way, download Prop Done Right, and you'll be on my list or whatever. And I send out stuff about tools and things that I think are fantastic that you can use. So Edgeful is a data analytics company, essentially, that was based initially on the concept of a gap fill report. I don't know. That's probably off the screen. Let me bring it over here. You see this thing that says gap fill report? So what I can do, oops, I should log in. Let me see if, I don't know why that's not logging me in. Okay, so I won't go through this whole tool right now, but essentially you can, am I in your Discord? Yes, I'm in your Discord. There you go. Anyway, check out Edgeful. I don't want to make this a commercial for that right now. All right, we took off our S&P short. Now we need to see if we can get the Dow to rally. Come on, Dow, rally. These bubbles are just little high volume things that are based on order blocks. I don't think they're useful for anything, but it puts one other thing on my chart that I think is silly. I'm not sure you could really short here. By the time you get a high volume block, who knows? Is that someone covering? Is this someone buying? I don't know. So what I do, since I was never able to get Peter or any of these guys that sell order flow stuff to explain to me exactly how it gave me a real edge or how I could trade with it. And literally they can't. They just come up with all this nonsense. I'll keep it simple and I'll just put an order on this green line right here where I know that 84% of price action takes place above that green line. Let's just keep it there. Now, we have some swings that are happening here too. You could measure one of these swings, and if it was at least 100 bars, you could use this as a long. But it's 55 bars. So I want more like 100 bars for the swing to be meaningful. Should have an interesting market on close today. Let's just get in a trade out of total boredom in some new 250 accounts. So we'll just, this little swing structure here, does it hold, does it not? Who cares? All right.
Order filled.
And then we'd scalp it right here.
Order submitted. Order submitted.
And for those worried that buying this and then buying, I guess I didn't get filled there. Where are we long? This one. Buying this right here and then buying again down here at 53.71 is going to get you flagged for dollar cost averaging. You can only buy one more. If you're doing minis, I don't know. If you're doing micros, call me if that ever happens to me. If you can verify that you got denied because of this behavior at Apex or any place else that might have a rule around adding into unprofitable positions. But only if it's micros and only if it's a couple micros. Not if you do this. If you do this,
order submitted.
I don't have any love
Order
for you.
Submitted.
If you do this,
order submitted.
That's not the same.
Order canceled.
All right.
Order filled. Order filled. Order submitted. Order submitted. Order filled.
Oh, 64. Look at
order filled.
Now we're short over here because that was a target that I didn't know that I had.
Order filled. Order submitted. Order submitted.
In what I'm doing right now, I'm providing zero value. I just decided I was going to stop ranting, and instead I'm just doing dumb stuff. Just to show you that with one contract or whatever, we'll see if this lane holds. If it gets above 42.50, I just hit the close button. With 4 minutes until market on close.
Order filled.
Let's measure this this swing right here. And by the way, these are 13-period swings on these tick bars. So in order to trade exactly the way I'm trading, you would need this bar type and you would need a 13-period swing against this tick because it won't look like that at all on this, right? It doesn't look like that at all. You can't put a swing on here. It's not going to look anything like that. Okay, so now we got this kind of interesting pepper look here.
Order canceled.
Let's cancel that here and here. Whoops.
Order canceled.
I did confirm that market if touched orders do work on, they work on Tradeovate when placed through Ninja like this. For a while, they weren't working. All right, we're long here. Sell stop.
Order submitted. Order
Put that one in
submitted.
there.
Order filled.
Okay, there we go. So when scalping like this, there was a question of how do you manage risk? Very carefully. With markets whipping this quickly, you get any move outside of a little range and you're on the wrong side, just hit the close button. Okay, the only time you hit the close button is during those butthole pucker times. Otherwise, you sell the ask, you buy the bid. Sell the ask if you want to get short, buy the bid if you want to get long. Sell the ask if you're covering a long, buy the bid if you're covering a short. I mentioned that in a lot of my streams too because I can't believe how many people use the market button. It's perfectly okay to drag a limit order into price too. That's just the same as market. All right, whatever. Sue me. All right, the one live trade we got on here, we're losing. We're targeting VWAP, and really, I'm just going to do a made-up level here of just under 40,000. See if we can get just under the psychological 40,000. The profits you see on there are not insane. They're commensurate with the stupidest trading day in the history of mankind, which was today. So I learned a little something in my trading past, which was how to take advantage of times like this. But if you were in my trade room this morning, I was completely distracted and a total mess because off screen I was dealing with hugely unprofitable positions. So come at me in the comments afterwards if you'd like. Piker trades demo accounts in front of people and loses his ass in the real world. That is correct. Fortunately, the Porsche is paid for.
Order filled.
All right, there we go. There's our nice little pop in the Dow, but it didn't get us to 40,000.
Order filled.
So we broke out of the zones there, so I'm just going to
Order filled.
close these positions at basically
order filled.
small losses. We'll see if next short would be up here
Order
at VWAP.
Order submitted.
Go, Dow. Who you guys got in the games tonight? I was joking that I should just change my trade room into a handicapping room. Problem is I'm not a very good handicapper, but we did have a few strategies that hit nicely yesterday, both Lakers yesterday and then Clippers the day before. When a team, NBA first round, you guys know this? NBA first round, if a team loses one at home, they're usually favored. So the road dog steals one, right? The home team in game 2 is like 71% ATS. And if you guys know anything about sports betting, that's insanity. 71 ATS. You back up the boat on that. So I was laying 5.5 Lakers yesterday. They won by 8 or 9. And we were laying 1.5 Clippers. And that was lucky, but it doesn't matter. You don't even have to watch the game. Anyone see the Dodgers game yesterday? That was freaking crazy. Chicago's got our number. Cubbies got our number. All right, Dow. Come on, baby. Let's do it. Yeah, it's nothing compared to I had a brief period of time where I was like mid 8 figures. And then it happened. All right. All right, got about another 7 minutes. We'll just sit here through the close. Sit on this boring chart here. Right below me at the bottom in the blue is the P&L of the tracking account that is at Interactive Brokers. So that's a live account with about $8,000 in it. And then you see this one down here. We have unrealized P&L of 0 because this is losing. But I don't know why it's not. The trade detect. I have it turned on. I don't use it. I don't even know exactly how to use it. That's this thing right here. So I should probably turn it off. We were just messing around with things that are on the order flow. I don't do anything with it. Go, Dow. Come on, baby. You can find out everything about the trade room and everything I got going on. Just go over to my website. The pricing's on the website. But the cost doesn't really matter until you go through a 2-week trial. See if you'd see any value in it. And while you're on the trial, every single trade room is recorded. So another thing you get when you become a member is we have the PTR recordings here. And for those that say there's, not enough training or course or whatever, I don't know. I challenge. There'd be nobody that could ever join my group and watch all these recordings because there's like 5 years worth of them. So you won't probably be able to watch. How much is that? 200, 1,000, 1,000 times. Maybe you could. It's like 4,000 hours. You could probably watch it, 4,000 hours. And you might not be able to see this, but these are little screenshots that I take and I put on the as the thumbnail to just show that, I doctor the results every day. And what you're seeing down below, that takes a while to doctor. And so here's one where there's some red. And then there was a really red day the other day. And then some days when I get a really good AI art from one of our members, I'll just put that, drinking the Apex Kool-Aid. And then this was a big losing day. I wish I had, let me bring up the screenshot of this day. I'm sure I have it. Because I rarely hit my daily risk budget in the prop programs, but I did that day and I want to show it. Hold on. Screenshots. Here we go. This is important. So that it's not always sunshine and roses. Which day would it be? Here. I think it's here. Yep, there it is. Okay, can you guys see this? This is important. So I have in $150,000 PAs, or excuse me, any $150,000, my daily risk budget is $1,180, just a little shy of $1,200. That's informed by what my average win day is over the best 4 days of every 22 trading days. So don't have to get into that. But basically, you can never have a daily risk budget that exceeds your ability to produce outside gains. In other words, produce alpha. So when you're starting, you set a daily risk budget of $250 or $300. And the only time you can ever increase your daily risk budget is not when and I've said this before, we have sound bites and clips of this on my YouTube channel in the shorts. You have to be able to produce gains in order to exceed, not just grow your account. This nonsense of start with one contract and then you get to this, then you add two, and this bullshit linear stuff. It doesn't work like that. Trading does not work like that. But what you're looking at here on the screen is these two PA accounts, when I get them to PA, then I have an $800 daily risk budget. So what a surprise, right around 732 and 659, I cut it and I was done. The balance on those accounts at that time was $158,000. It's very easy for me to recover, right? Now these I had just started. This is super rare that I ever dig myself a hole, but it happened. I had to hit the close button there, and then you can see the rest of these. I've since grown these and taken some payouts from them, and then now I think I have the same group. Sorry, no, not out of Take Profit. I didn't have some Tradeifys and other things connected that day. Anyway, that's all I wanted to show you there. Is what do? You hit the close button and you do the proverbial fight for another day. But instead, so many people's questions are always about the strategy and this and the that and this and the that, when really, anyway, the pricing is over here. And we often run specials on Lifetime where you can make a one-time investment of somewhere between $1,500 and $2,000, and it'll be the last investment you ever have to make. I'll be here every day. You put in the time, I'll put in the time. So Giuliani was saying, what do you do when the market already opens at 2 standard deviations? This is important, okay? Great question. When it opens, you're not trading. You have to let, so here's what happens, right? When we reopen, the bands are already super tight. So what you want to do, Giuliano, is watch the previous live where I spend an entire hour talking about how to overlay 23-hour, 7-day ATR against the bands. So the answer is you don't do anything, because the bands are, when the market first opens, they're going to probably always open right at it because it's a reset, right, from the reopen. So all of this in here is untradeable. It's not tradable until generally the market opens, but sometimes you'll get a decent amount of range expansion in overnight, especially with the uncertainties that we have in the markets right now. But once the market, this is the cash open here this morning, right? See how it held? So they adjusted. It went out for a moment. It didn't open here. So the answer is, if you find, you just don't trade. That's the bottom line, all right? They're going to reset, and they take time. They need time to expand and to adjust to the volatility profile. We're going lower. We're going lower. Lower. All right, there's 1 o'clock. I'm going to go ahead and close this ZT trade that I have in Take Profit. One thing I really like about Take Profit is you can still trade treasuries over there, and I do trade treasuries in pro accounts. I don't trade them while I'm going through the evaluation because I don't think that's really fair. Because at the cash open, so Gianna, at the cash open, the time in which they will be hitting those lines is generally days in which there's not at least 50% ATR. So again, go watch the other video and I'll explain this, but what you want to do is look at the ATR right now. 7-day ATR on the S&P is 200. So you would have a soft rule of saying you don't trade the bands until there's at least 50% range or 100 points. And if there had been 100 points overnight leading up to the cash open, more often than not, you'll find that the bands have expanded and you'll be within range. Okay? So you got to understand the volatility profile. You don't blindly trade mean reversion without understanding what the possible range is for the day. Yeah, the green number's there, but I want to be clear. This is a more, I guess I closed it. This is a more important number. It didn't happen today, but it could have. I want to share this too. Oh, here, this one. So this is a much more important screenshot to take. Keep yourself in the game. Risk budget's informed by your trading skill. And these are also some of the screenshots I was sharing with Apex as we were going through, confirming that this is not going to create a violation. Oh, here's another day. Important, okay? I was looking for other losing days. See this? $800. Okay? Done. This one, $1,080. Should have been $800. So this is a big red day. And then these are PAs. Violated a little bit there. Okay? So these are more important screenshots than what's up right now. Okay? And while I don't hope for this, there will be a day where I will stream at some point where the screen will look like that. Where I'll be, hey, I've hit my daily risk budget in these accounts here. There's nothing else I can do right now. I was looking for the, I wanted to show the screenshot of what's now, oh, here, maybe it's this one. Yes, okay. So this is what I was sharing with the guys at Apex and some others, just showing short MNQ, long MES at the same time. And I went and did an entire video and explained exactly what the nature of those positions were, that they had nothing to do with hedging. They had nothing, they weren't entered at the same time. They were simply just a matter of the markets doing what the markets are doing right now, which is giving you occasionally opportunities to be long a particular stock index and short another one at the same time. Now, the important thing to point out about this screenshot, though, is that these are micros and that these are 2 lots. Okay? The other thing that's important to point out about it is they are not offset. It'd be a whole nother thing if this screenshot was something like, hey, up $188 in, or $186 in the NASDAQ, down $181 in the S&P. If you shared something like this with Apex and said, hey, you know, whatever, Rod showed me something, I don't know if I'm going to defend you. Okay? All I was pointing out to them was, hey, I wanted to timestamp exactly what was happening in these accounts and why, so that we can eliminate this silly rule when it comes to people that are doing risk-adjusted trading and are trading micros. Because I started with this, and this will be my last point. It's unfortunate, but we, the collective we, anyone I can bring into my tribe, we have been lumped in with this other group that's these other groups, which is a vast majority of these firms' customers, are just shot taken. Whether they want to admit it or not, they're just shot taking, including the quote-unquote traders that are showing million payouts, 100,000, 500,000 payout. Great, whatever. Not real, not realistic. You did it. Great, fantastic. I think it's irresponsible, and I'm actually pretty surprised that these firms made those kinds of payouts, but they did to some people. And they denied it a bunch of others because dolphins are getting caught in the tuna nets. What's a bummer is us little minnows, we're getting caught in the tuna nets, and we should be able to swim right through the mesh, right? All right. Down, I don't know, let's see. History. This thing does a crappy job of, it's not telling me what my, I'd have to log into the website to look. Anyway, up $282 in profit. So if it was showing 400 before, it looks like this Dow position's down like 100 bucks or so. Do I trade accounts separately? Vast majority of the time I will create replication groups, and those replication groups are usually 3 to 5 accounts. So I trade them separately as groups. All right, everybody, stay green, trade like you mean it. Thanks for joining today. Remember, links to everything that we do here down below. Please download Prop Done Right. I think you'll dig it. It might be the last resource I get around to creating for 5 years, so try to take advantage of it because it's very topical for things that you can actually do and implement right now. We'll see you later. Be good. Bye.